This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Go Google. It's one of the hottest blue chips of the year. Should you own it? Will it be the first tech company to hit $1,000 a share?
Flying high, why airline stocks are taking off, along with customer complaints.
And hitting the jackpot, Powerball fever spreading across the country, and there are 360 million reasons to buy a ticket for tonight's drawing. All that and more tonight on Nightly Business Report for Wednesday, May 15th. Good evening, everybody. A lot of tech news sort of topping our program tonight.
Yes, and some of it very encouraging news from a tech titan tonight. Cisco Systems reported solid quarterly earnings and revenues after the market closed. The numbers topped analyst estimates, and investors bought up the stock in after hours. Cisco rose as much as 4%. Seema Modi is standing by at the NASDAQ with all the details. Seema?
Susie, it was a beat for Cisco Systems on its top and bottom line, earning 51 cents a share on revenue of $12.2 billion for the third quarter. Now, CEO John Chambers said Cisco is executing at a very high level in a slow but steady economic environment. We are especially pleased with our 9th consecutive record revenue quarter. Now, Chambers also seemed pretty upbeat about the economy, saying we're starting to see some good signs in the U.S. and other parts of the world, which are encouraging. Now, shares of Cisco up after hours, but climbed even higher after the company reported an upbeat outlook for the current quarter. Susie and Tyler, back to you.
Thanks a lot, Seema. Seema Modi reporting from the NASDAQ. Tyler?
And before those Cisco numbers, Google was all the talk on Wall Street today. The stock breaking through $900 a share, and the company tried to add to the optimism by rolling out a line of new products at its annual conference for developers. John Ford is covering the event for us from San Francisco. John?
Yeah, Tyler, big day for Google. Stock up better than 3%. On the other hand, some rivals, Apple, down more than 3%. Part of the reason why, perhaps, one of the big announcements from Google out of its I/O conference here was a new music service, Google Play Music All Access. The pitch here, similar to services like Spotify, is all the music in Google's catalog at the user's disposal for just $9.99 per month, rolling out in the U.S. first, starting June 30th. Well, if you sign up by June 30th, you get the service actually for a little bit cheaper. What's interesting about this, too, is there's a radio component to it, which competes with folks like Spotify. And Pandora, taking a step back, there was more than just music announced here. Google also talked about the service that they want to expand, Google Plus, lots of new photo and video sharing features in that. And overall, this was not about hardware as much as it was last year. Last year, Google talked a lot more about streaming music through a little device that they actually pulled from the market soon after announcing it. They talked more about tablets. This was squarely about services, which is very much Google's strong suit. They also rolled out a new version of Maps that we'll have later in the summer. Back to you.
All right, John Ford, thank you very much.
Well, Google stock is up almost 30% this year and is on the verge of becoming the first tech company to hit $1,000 a share. So the question for many investors, time to buy or sell the stock? Joining us now to answer that, Paul LaMonica, he's assistant managing editor for CNN Money, and Ben Schachter, technology analyst at Macquarie Research. So, gentlemen, I mean, the question here is, should investors buy, sell, or hold? Ben, you have a target of $925 on shares of Google. It's almost there. What would you tell your clients now? Buy, sell, or hold?
We actually still like the stock here and think there's a lot of momentum behind it. They continue to sort of push the envelope in the different things that they're able to do. The core business of advertising is working well, and they have all these other services and software and hardware on top of that. So we think the shares can go higher from here.
Paul, answer what Ben just said. I know you don't dislike the stock, but you don't see it as a bargain at, what, $915 a share. And, of course, the history of companies that grow so far so fast, particularly in the tech business, is that they sometimes slip and fall later.
That's definitely true. I do agree with Ben 100% that Google just dominates online advertising right now. But in some respects, I think investors need to be a little worried that Google right now is eerily like Apple back in September of last year. Just before the iPhone 5 came out, everyone thought Apple could do no wrong. And it's been a very bloody sell-off. And I think part of that can be attributed to the fact that just so many big money hedge funds and institutions owned Apple, and once they soured on it, so to speak, it was just a long unwinding. And now Google is a popular hedge fund stock too. So I just think it's something investors need to be aware of, although it's not necessarily predicting any sort of massive sell-off for Google anytime soon.
Well, Ben, what do you say to that? Is Google over-owned, too much of a love affair with the stock, the same thing that happened with Apple a year ago? What do you say to that?
Well, listen, I always get concerned when a stock runs this far, this fast, on no real change to the fundamentals. However, in this situation, I think what is happening is that people are realizing that beyond the advertising, beyond search, beyond display ads, there's a whole other part of this business that's just developing now around services, around hardware, around Google X, and we think a marketplace that's going to compete directly with eBay and Amazon is also coming. So a lot of very big things are still to come for Google.
This is a very big business, Paul, and obviously they're dominant in search. They're dominant in online advertising. They've got the #1 cell phone operating system in the Android platform. Now they're getting into the music business. They've got a tablet. It feels like the business is clicking on all cylinders. You point out the growth rate is something like 15% in profit. The PE on 2013 is something like 19. So therein lies a little bit of the rub. But this is a succeeding company, isn't it, Paul?
Without question. And what I really love and admire about Google is that it is not a company that's resting on its laurels. It recognizes that there is tough competition from Apple, from Amazon, as Ben mentioned, that's coming. Facebook, obviously, as well. It'd be very easy for Google to just sit back and relax and say, yay, we're at $900 a share, $300 billion market value. Obviously, Wall Street loves what we're doing, so we don't really need to change that. But Google has been a company that just recently they shifted management, taking the longtime head of Android, putting him in another position at the company, and promoting someone who had been in charge of Chrome and having him now also in charge of Android. And I think that shows that this is a company that isn't going to just say, yeah, we're doing everything exactly as we should be. It's a company that recognizes there's room for improvement, even though they are doing extremely well already. And I think that's very good to see.
Ben, there's no question here that Google is behaving like an innovation machine. Listening to our report from John Fort from the conference, and you're there too, of course, do you think these new product rollouts that he was talking about, are they game changers? Are these the kinds of things that are going to power Google stock higher? Or is Google getting too much away from its core business of search?
Well, I think on the first question of today and the conference, there was not a lot really that's going to move the needle for Google. A music service is a good thing to have. It'll certainly help with Android and help with Play, but it's not really going to change the numbers fundamentally. Going forward, I think you touch on a very interesting point, and that is they are doing a lot of things that are quite different from advertising, quite different from search. The question remains, are these things going to succeed? So far, we think they have momentum, we think they're on the right track, but it's going to take some time.
All right, Ben, Paul, thank you so much. Ben Schachter of Macquarie Research, Paul LaMonica from CNN Money.
Well, the rally that just won't quit, the Dow and S&P closing at record highs once again, better than expected earnings helping drive the gains despite some mixed economic reports. New York's manufacturing sector unexpectedly contracted to its lowest level in 4 months, falling to a reading of minus 1.43 in May. Industrial production fell 0.5% in April, more than the expected 0.2% decline. But in the end, the Dow finished up 60 to 15,275.69. That's its 20th record close of the year. The S&P rose 8 points to 1658 and change, and the NASDAQ was up 9 points to 3471.62.
Some mixed readings on the housing front today. Let's start with the good news first. Confidence among home builders is up and sales trends are improving. The National Association of Home Builders Sentiment Index rose to 44 from 41 in the month of April. The increase in May was the first month-to-month gain since December. Now to the not so good news. Applications for mortgages fell 7.3% last week. The reason they're rising interest rates. The Mortgage Bankers Association says it's the first decline in more than a month.
Airline stocks have been elevating lately, up more than 1% today as a group. But as the shares rise, so do customer complaints. Phil LeBeau joining us now from Chicago. Hi, Phil.
Tyler, this is some data that I think people are going to look at and they're going to say, kind of makes sense since I've seen the packed planes lately. Let's first start off with the Department of Transportation reporting to complaints about airlines for the first quarter. And overall, they were up 17.1%. This is on top of the DOT seeing higher passenger complaint rates last year. And then there's the question of involuntary denied boardings or bumpings. Well, it was 1.06 per 10,000 passengers in the first quarter, but look over the last 2 years. It's been steadily increasing. And then when it comes to baggage, the airlines mishandled 3.05 bags per 1,000 passengers. And this is on top of them announcing just a few days ago they made $3.6 billion on bag fees last year. And oh, by the way, when it comes to on-time arrivals, overall for the industry, it slipped slightly in the month of March. But there you see Hawaii and Virgin America and Alaska all among the top three. This has not stopped the airline stocks. Overall, the airline index has been off to the races, up 53%. And when you look at individual airlines over the last year, Alaska Airlines up 96%. And then you have Southwest, Delta, U.S. Airways, United. They're all posting fantastic returns. The bottom line is this, Tyler and Susie. They're expecting a solid second quarter, and that has investors excited.
All right, Phil LeBeau, thank you very much. Phil reporting from Chicago.
Still ahead on the program, is AIG, which many know as the bailed-out insurance giant, on its way to regaining its past glory? We'll take a look as we continue our series, Comeback Companies. But first, how the international markets closed today.
We begin tonight's market focus with a pair of companies reaching new milestones. First up, Macy's. Shares of the department store hitting an all-time high after the company posted a 20% increase in its first quarter net. Macy's earned $217 million, 55 cents a share. That's 2 cents better than estimates. Sales up 4% to nearly $6.4 billion. The company also raised its dividend a nickel to 25 cents and said it's going to buy back $1.5 billion worth of its shares. Shares up 2.5% to close at $48.57. Meanwhile, shares of Bristol-Myers Squibb are running up to a 52-week high today ahead of the release of clinical results for an experimental cancer drug. The stock was the best performer in the S&P 500 today, up 5% to $44.34, and shares have been on a tear over the past year, up more than 30%.
SunPower shares were another bright spot today on Wall Street. The nation's second largest solar panel maker said its profits and sales for the rest of the year would be above Wall Street estimates. SunPower rose 8.5% to close at $20.65 and is up more than 300% in the past year. And that helped lift many of the companies in the solar space, all up strongly with the exception of the biggest one, First Solar. But a weak outlook overshadowed better than expected numbers from Deere & Company. The world's largest farm equipment maker earned $1 billion in its second quarter on a 9% rise in sales. Total revenue came in at nearly $11 billion. But Deere, which also makes construction equipment, cut its full-year sales forecast, blaming cooler, wetter spring weather and weaker global economies. Shares were off about 4.5% today to $89.64.
The biggest loser today among the S&P 500 companies was Computer Sciences. The information tech company posted a profit in its fiscal fourth quarter, but sales fell 7% and were shy of expectations. Shares down about 10% today to $44.71, but are up nearly 70% over the past year.
And AIG, this was the poster boy for bailed out companies. It received nearly $200 billion from the government during the financial crisis. Today, the company is a slimmer version of what it used to be. And as Mary Thompson tells us in our Comeback Companies series, AIG is still working on regaining its past glory.
Having put AIG's turbulent past behind it, CEO Bob Ben-Moshe now aiming for a steadier future for the insurance giant.
I think it's a simpler company, more focused company, and so therefore, in my mind, easier to manage and one that I think is much more secure.
Ben-Moshe engineering a turnaround, ridding AIG of government ownership, creating a firm with two core businesses, a global property and casualty unit and a domestic life insurer called SunAmerica. The stock's doubled since 2009, and while analyst Brian Meredith admires the turnaround, he notes it came at a cost.
Before the crisis, at least in the property casualty insurance industry and the life industry, I mean, AIG was viewed as the global leader in P&C insurance business. I would say today it's viewed as one of the leaders, but not the kind of dominant global leader.
Better underwriting and higher rates helping AIG's P&C business and underpinning a strong first quarter. Still, there's work to be done on that business's profitability, which lags its peers. Analysts say returning those numbers key to AIG's future success. Investors also want dividends and buybacks. Before AIG pays a dividend, it has to satisfy the concerns of some credit rating agencies and then has to wait and see if the Federal Reserve becomes its regulator, because the Fed will have ultimate approval over any dividend AIG does pay. So the government still has some sway over AIG. In 2008, the government took a 92% stake in the firm after AIG's securities lending and financial products businesses nearly took it down. AIG repaying the $182 billion bailout, selling 27 businesses, including an international life insurer and consumer finance units in Russia and Mexico. Stock sales and interest netting the government a profit of more than $22 billion. Now it's AIG's improving P&C profits, key to bigger returns for its citizen investors. For Nightly Business Report, I'm Mary Thompson.
Tomorrow we'll take a look at a familiar food company that saw rapid growth, then a rapid decline, and is now rolling in dough.
Coming up, the art of the deal as prices rise for high-end paintings is a bubble forming that's about to burst. But first, a look at how commodities, treasuries, and currencies fared today.
Not only is the stock market red hot these days, so is the art market. Collectors from across the globe have been bidding up prices, but there are signs that may be changing, leaving some to wonder whether the high-end art market may be poised for a fall. Robert Frank reports.
Prices for the top works of art at this week's auction in New York are getting downright surreal. The question now is whether those prices can continue.
And started here at $24 million to $25 million.
The top seller at last night's Sotheby's sale was Barnett Newman. His piece, called 1 Mint 6, sold for $43.8 million. The painting is a blue canvas with a simple white line down the middle. That was nearly twice the former record price for a Barnett Newman. The runner-up was Gerhard Richter's painting of Milan's Cathedral Square. That sold for $37 million. Now, there were some big losers at the Sotheby's sale. A Francis Bacon piece that was expected to sell for $20 to $30 million failed to sell. Now, these uneven results have some wondering whether the art market has become a latest asset bubble that's ready to pop. Mike Novogratz of Fortress Investment Group likened art to gold and said speculation in the art market cannot go on for much longer.
Art is 100% a bubble. I mean, it has all the markings of a bubble. I mean, the Newman painting doubled in price. You know, prices have gone parabolic.
So where is the money for all this art coming from? Well, much of it is coming from the wealthy who have seen their portfolios soar with the stock market. It's also coming from the newly rich overseas. Wealthy collectors from Russia and China pouring money into art as a safe and portable store of wealth.
You also have the illegal money, or the dirty money, the money laundering that's coming out of, you know, vast parts of the world where people don't want an easy place to store their money. And that's what really is giving this kind of turbocharge to the art market.
Sotheby's said in a statement this morning that the sale is proof of strong global demand. It said collectors bid from 35 countries, and 1 in 5 of those bidders were new to Sotheby's or the category. For Nightly Business Report, I'm Robert Frank.
Well, tonight brings another high-profile art sale. 2 famous paintings by Jackson Pollock and Jean-Michel Basquiat are up for auction at Christie's, and each is expected to sell for as much as $35 million. And joining us now to discuss that and more is Christie's CEO Stephen Murphy. Mr. Murphy, welcome. A very exciting night ahead for you this evening.
Thank you. We're quite excited.
I bet you are. Before we get to the works that are on offer tonight, I want to get your reaction to what we just heard in the piece by Robert Frank. Turbocharged, all the markings of a bubble. That's what one of the sources said.
Right.
Do you agree with that? And if not, why not?
Well, with all respect to the gentleman who is speaking, he's way off the mark. There's a proclivity to certain people to try to draw a trend out of one evening sale or one lot being not sold. The art market, if you will, has really been on the same curve of growth since before the recession. And during the recession, there was a pause. After 2008, it paused. It picked up again in 2010. It's been growing ever since. And the main reason it's growing is that there's a worldwide demand for art. A bubble is when the demand and the supply is out of whack with each other, and it's been inflated. It's quite the other case with us. There's a scarcity of masterpieces, and there's a huge demand for masterpieces and lesser art as well. We did over $6 billion of art sales last year. And while we had a $400 million sale in November for post-war contemporary art, which gets a lot of the attention, there's a lot of other art being sold.
Let me ask you this, Mr. Murphy. We know that the stock market has been hitting new highs.
Right.
Does the art market work in tandem with that? What's the connection between stocks and art?
It's not very close at all. In fact, that's part of what I would say to the gentleman on your tape, that in fact, when the stock market is a bit down and the art market rises, people might say that investors are running to the asset of art instead of equities. Well, now that the stock market's up, people are still buying more. So what's really happening is the interest in art and the demand for art has gone global. It's buyers from Russia, China, the Emirates, the other parts of the Far East, and U.S. and Europe growing. Over 25% of our buyers last year were brand new to Christie's, and we've been selling art since 1766. So I think the idea also comes through in this. At the Metropolitan Museum of Art in November, there was an Andy Warhol exhibit. 500,000 people went through a fairly short period of time visiting that art. So there's such a huge surge of interest in art around the world. That's what's driving this demand.
There is so much I want to ask you, and I know Susie feels the same way, but I don't want to let you leave us without having the viewers see the pieces that are on offer this evening.
Yes, there's still time to bid.
Let's start with the Pollock
Susie,
and why it is a signal piece and what you expect to get for it.
Well, this is a perfect example. The estimate's between 25 and 35 million. Jackson Pollock is an established and certified master. It's very rare to have a piece like this available. It is a masterpiece among his masterpieces. And as you know, in the art world, it takes an auctioneer and 2 people to have the bidding go up. And it's all transparent. It's right out there in the open. So I believe that since we have a great deal of interest, this should do quite well.
We have to leave it there, alas. Good luck with the sales this evening, Stephen Murphy of Christie's.
Thank you.
And finally tonight, what would you do with $360 million? Maybe buy some art, a masterpiece, go to Hawaii, buy a baseball team, give it to charity. The only thing standing between you and your dreams are 6 numbers that will be drawn at random in tonight's Powerball game. And with people lining up for tickets, Hampton Pearson takes a look at lottery fever that's gripping the nation.
It's Powerball fever once again. An estimated $360 million jackpot, 3rd largest in history, has lots of dreamers looking for the magic 6 numbers that could change their lives.
I would pay off my house, pay off my father's house, send my son to the best school in the country, and retire.
Back on March 23rd, a New Jersey resident, Pedro Quezada, won $338 million, part of a trend, lottery officials say, of jackpots getting bigger in shorter amounts of time. More than half of the all-time jackpot records have been set in the last 3 years. Among those chasing tonight's triple-digit jackpot, Lisa Walters, mayor of Battleground, Washington.
The deal with the jackpots being so high is more and more people are buying them, so it raises the pot up just a little bit. Odds go down a little bit, but, you know, I could be that one.
Jurisdictions with lotteries continue to cash in. Total U.S. sales last year topped $78 billion, another $9 billion in Canada. Marketing the lottery in search of those revenues is a full-time job. This afternoon inside Union Station, the D.C. Lottery staged a promotion tied to this weekend's running of the Preakness horse race in Maryland. But the real action was just around the corner at this boutique-style lottery location. Powerball sales were brisk, but D.C.'s lottery director says the industry is concerned about jackpot fatigue.
Players get used to the large jackpots, and it takes higher and higher levels of jackpot to get the same level of excitement.
So if there's no winner tonight, Saturday's Powerball jackpot could swell to $500 million. Talk about Saturday night fever. For Nightly Business Report, I'm Hampton Pearson in Washington.
All right, what would you do with it?
I would pay off my mortgage and endow Nightly Business Report in perpetuity.
Oh, I love that. I wish I was as generous. I was thinking of moving to Paris.
Paris? Okay.
Anyway, that's Nightly Business Report for tonight. I'm Susie Garrett. Thanks for watching. Go get your Powerball ticket.
Go get your I'm going to get one right now. I'm Tyler Matheson. Thanks for watching. Have a great evening. We'll hope to see you back here a lot richer tomorrow night.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
I'm Susie Garrett with a Nightly Business Report news brief. Google breaking through $900 a share today, and at its annual developers conference, the company showcased a line of products like new maps, software for mobile phones, and a new music service. Also encouraging news from another tech titan. Cisco Systems reported solid quarterly earnings and revenues after the market close. The numbers topped analyst estimates, and investors bought up the stock in after hours, shares rising more than 8%. On Wall Street, the Dow finished up 60 points to 15,275, its 20th record close of the year. The S&P rose 8 points, the Nasdaq gained 9. And what would you do with $360 million? That's what's at stake in tonight's Powerball drawing. It's the third largest jackpot ever. Good luck, everyone. Be sure to tune in to Nightly Business Report right here on your public television station.